So engineered liquidity is when there is an obvious consolidation. That is just too easy to, like this is clearly an engineered liquidity, right? This not so much, but this for sure. And notice that once this engineered liquidity was finished forming, what did it do? It came down and got it. This is engineered liquidity. Equal lows, but not just 2 wicks. I mean, look how many times price gets to this price point in particular and stops. Like an entire market, global market, gets to this one price point, which is 39.88. Rejects, 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 rejects. I mean, look how many times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times in this hour and a half span that price went to 39.88 and pulled away from it. So what it's doing is it's inducing buyers in this area right here, which is placing their stops just below it, because that's where you're going to place your stops to eventually come back and get it. So that's engineered liquidity. So this is somewhat, but it's not clean, right? It's not perfectly clean. You got some sideways action here, and then it drops down, and then you start consolidating up into here, and then it comes this way and stuff. So it's just not clean. Is it a trend? Yes. You can put a trend line on it. You can go up in there. Yes. There is liquidity below it, but it's not as clean as what this one looks like. This is just too perfect. Oh my gosh. That's just too perfect. And when you get perfect liquidity like that, the algo is doing something. So when I see price and liquidity being engineered in this fashion, like there is liquidity to the top side of this, but it keeps grabbing it, right? Every time we push up above this candle, it grabs its liquidity. So that liquidity was grabbed right here. This liquidity was taken right here. This liquidity was taken right here. But this liquidity didn't get taken. It just keeps growing. You got liquidity here, more here, more here. Then it slams down, takes it out, takes it out, takes it out. And I'm not trying to play this drop. Exactly, building that pressure. I'm not trying to play, like I'm not trying to gamble and say, okay, this time it's going to come and get the liquidity, so I'm going to go ahead and sell right here. I don't know that. I don't know when it's going to do that. But when it does create this type of a candle and it gives you, that displacement, right? Which is that fair value gap, gives you that displacement. Now I've got a reason to play the market. We've grabbed liquidity. We did it with aggressiveness. There's displacement. I'm going to take a sell trade. And you can target the rest of that liquidity if there's enough of it, or other liquidity that's below it that it still hasn't come and taken. And what did it do? All the way down. So it is timing, like, because you have to be watching the market when this happens, right? But you're not betting that this is going to happen because you don't know. There's just probably a really good indication that when price does something like this perfectly, it's going to end up taking it. right? That's the reason why we emphasize equal highs and lows, right? It's too perfect. This market shouldn't move in that type of perfect. It shouldn't move that perfectly. It should be jagged and nasty looking, kind of like this. But when you get perfect price points, that is going to be taken. And when it's taken, you get displacement. And guess what? We could have taken a buy there, targeted this area, or even the highs up there, which it never went and got, but could have. So that's the reason why trading towards the liquidity, right? Trading towards the liquidity is how you always need to be thinking. Like, this is a pretty good trend line. It's jagged, but it's engineered, right? It's pretty perfect. It's pretty good stuff. Some people would look at this, especially on a higher time frame, and they would look at it like that. Like, that is like a huge drop, right? But it's completely different. This, look how long it took to get down here. It's doing that for a reason. This was taking this liquidity that took forever to get here. That's the reason why it took, what, say 6 o'clock to almost 10 o'clock, or 6 o'clock to almost 8 o'clock, 2 hours. This is a 2-hour drop. But then from this point to this point, you're looking at less than an hour. Grab all that liquidity. Engineered. Did that for a reason. Here's your displacement. Comes up and takes the liquidity. You play the return. You get that little bit. But you could have also targeted up here and just kind of held through some nastiness. Or re-entered. It's a good question though, man. What is engineered liquidity? It's a good question.